Hey, welcome everybody. What a good way to start the month. First and foremost, as I promised, I would give you new monthly buy signals, and I'm 2 days late for that. My bad. One name. What we're looking at are, and again, as you can see, and I'll share this with you, high close dojis. Now, I don't want to sound mean or anything, but if you don't know what the high close doji, this is a pattern that I discovered some 20 years ago. It's not quite a variation of a morning doji star, but it's a bullish pattern, number one. Number two, it allows us a couple things. It tells me if after a doji, how many bars afterwards. If a market closes greater than the high of a doji after so many bars, that's the trick. Can't be forever. It's got to be kind of immediate. So a couple things that we look for. A, within two bars, you should see positive response, a higher high, a higher low, something of that nature. Number two, it's also a signal that allows us to give some people may argue with this, but it has a pretty outstanding statistical fact that over 57% of the time you get a high close doji, you get a 1-to-1 risk-reward ratio. Measured objective, whatever the risk is. X is your stop, 0 is your entry, and the double X would be the 1-to-1 risk-reward ratio will happen between 8 to 10 bars. That's generally the strategy. So it gives you risk, it gives you measurement, it gives you timing, and I'm not saying it takes 8 bars. If it's a monthly chart, it could happen the same 2 bars later. It could never happen, right? The moral of the story is we also like to look for confirming evidence by an accumulation in volume. This is my proprietary volume indicator found on TradeStation, and this is on balance volume. So in lieu of not having this, you can kind of look at on balance volume. What is the difference? Well, mine is more of a modernized volume approach, and you can clearly see where the low in on balance volume made a secondary lower low, and my volume indicator made a secondary higher low. This shows more of a stronger accumulation of a convergence, and on balance volume doesn't really filter that out. If you'll notice that this is a close and the prior swing low close, lower prices. However, volume, if you looked at that, you would say, oh, it's negative, it's going down a lot further. If you use my volume indicator, you would notice that, hey, the momentum, it does two things. It's a momentum of volume indicator, and again, it smooths out the volume moving average. So it really does filter out these bad moves. Anyway, so with that said, forming high close dojis. Lyft did such a, now again, I'm 2 days late, I apologize for that, but for my clients, we do this list in our live trading room. But I did want to get through a couple names that I think were fairly interesting. Number one, this is, we ran this particular scan off the the NYSE. And if we scroll on down the list, if I may be so bold, here we go. We had a total of 362 monthly new buy signals. CSX, by the way. JetBlue, by the way. JetBlue had a big upturn. It hit a kind of a resistance spot. But look at the volume. It's in an accumulated mode. This will probably give you a fairly decent buying back into support. If we go back into a daily buy signal, we want to go and join the upside longer-term trend with JetBlue. That's a powerful buy signal. Autodesk, well, it's already broken out. A lot of these names broke out. Cree, the LED light maker. I mean, it exploded on scene. These are the types of trades that I tend to stay away from. When they've just blown off and the risk is too great, number one. Number two, it's not a true high close doji. So the trick for this particular scan is we have to look at specific names individually. Now, what I did see was a Lyft, and again, I apologize for the 2 days late, but Lyft, if you even suspect that we could see about a $18 move from here to the upside, there's still a lot of room over the next few months. And again, it's very interesting to note, if you remember when I showed the chart prior, you had very similar pattern, right? So Lyft has a decent upside in that regards to the momentum. Microchip, it already broke out, very similar to a lot of it's not like I'm sharing the same chart over and over again. What I'd like to show you is another one is in the semiconductor Rambus. Now, random access memory, if you remember Rambus, I mean, I don't think it really has a lot of validity in this market, like, for example, NVIDIA, right? But we are seeing a wide, solid sideways action. And the longer the sideways action, the bigger the breakout could be. Is this the year for Rambus? Volume's not 100% behind the move, but I would say the risk factor is pretty minimum. Follow that trade and look for possibly closes above $17 on a monthly basis in December. And man, this could be one hellacious of a breakout for whatever reason. And I'm just pointing out technical signals. I'm not getting into the fundamentals. And there's a lot of stocks within this. Now, let me introduce you to Thinkorswim real quick. So we have lots of buy signals on a monthly basis, new, fresh monthly buy signals. Now, for a day trader, this is stuff that you're going to be like, John, I can't trade this. I can't hold on to a trade for maybe 8 months. I get that. So what we're trying to do as well is what I wanted to introduce you to with the PPS indicator. Here it is. We, on a day that you see maybe a market that declines, the overall market, S&P 500, on a down day, and then you start to see an upside. Run the daily PPS buy scan. If you go to study, go to license study, PPS buy signal. Then go to scan in. It's an amazing selection of what Thinkorswim put together, by the way, in sectors or broad market indices. And I'm going with the Russell 3000, which includes most of the stocks in the 500 or in the 3000, Russell 3000. So to give us a better gauge of stocks, or a higher exposure to more stocks, I'm running a daily PPS buy signal. Now, again, today is December 2nd. It's Wednesday. I'm also going to add an overlay filtered study called On Balance Volume, and you can find that in popular studies. Now, back, 10, 11 years ago, we helped popularize and develop this on balance volume scan because it was our thing. We were talking about on balance volume and throwing in a moving average, and that's how that came about. Anyway, with an old employee of Thinkorswim, Toss, and I mean that goes back almost 2 decades, right? I mean, a decade ago, 12 years ago. Anyway, we go with the on balance volume. What's really neat about this, you want to see volume increasing for buy signals, and you want to go volume decreasing for sell signals. Now, for a daily scan, I'm running it for 3 periods. So I want to see volume increasing over the last 3 periods and then a buy signal, because that'll signify that people have been buying and accumulating over time. So with that said, let's take a look at what ran and formatted today. Valero Energy in the energy oil sector. So you can do this scan yourself, but aerospace defense. What I also wanted to finalize with you is in my weekly newsletter, see if this makes sense to you, I want to try to focus on stocks that are in seasonally strong periods. And right now in the month of December, I mean, it's almost like student body right, everything goes bullish, except for a few things: utilities, real estates, casinos. It's neutral. NASDAQ doesn't have a great month in December. Bonds, airlines, transports, retail. XRT is different than discretionary. So there's a difference of what is contained in consumer discretionary. So I'm giving you a little light lesson here to see if you can kind of follow with what I would like to do. I like to run its scans and find out, hey, on the monthly, they gave big higher time frame buy signals. That's what the institutions are doing. They're not day trading. They're not scalping. They're buying and they're adding to positions. Now, if you get a day or two pullback, the retail public freaks out when you get a little small setback, or maybe their stops are held too tight. They get stopped out. The next day you get a buy signal and they don't follow it. What I'm trying to do is share with you how we can follow the flow of the market with the tools at our disposal. So using seasonality and understanding what sectors are positive or negative, aerospace defense, for example. And oh, what a coincidence. And in case you didn't see that on the newsletter, I'll bring it back to your focus. Aerospace and defense, healthcare, computer technology, materials, right? Consumer discretionary, broker dealers, grains, copper, all bullish in the month of December. So if you sit there and go, gee, the market's up, well, here's why, all right? It's year after year after year, it has a tendency of rising due to supply and demand constraints, all right? So with that said, here you have aerospace and defense, Boeing, which generated a daily buy with increased volume. So we have Boeing, we have General Dynamics. These are some names that we could probably look for further upside in the next couple days, which for an option trader is a dream come true to find your own upside. So let's take a look at BA real quick and see what it shows. Well, last month, wow, it generated a buy signal. This is a monthly PPS buy signal. While it's not a high close doji, it still generated a very strong buy signal on a month. And my volume indicator, not on balance volume, shows strong accumulation and in Boeing. So now we have some follow through. The daily and the weekly. So the volume, this is the volume trend indicator as well. We're starting to see kind of an uptick. There's the volume, it's upticking. It's greater almost than 3 days ago. So that met the trade station criteria. Next, we have a daily buy signal. So if there is a shot that we want to break out, I'd say the first stop would be 241, and then we'll take it one step at a time. Ultimate resistance over the next 3 to 6 months is going to be $300, right there, right where Boeing was. And so I think that for the next 90 to 120 days, option traders, you want to go deep OTM. There's your idea. $300 is the target on that trade or that setup. Let's look at GD. General Dynamics. Wow, it's been a torrential downtrend. I mean, for the last year and a half, since 2018, 2 years. But the volume here started to show some accumulation. So General Dynamics is still kind of iffy. I would wait for maybe a stronger weekly close. But it's nice to see that you're getting concentration of buy signals in a sector that's bullish. Anyway, there's a lot more that we could do. I just wanted to share with you, and you can always pause the video and look at the names and the symbols as we go up and down, and I'll do it over here. Ambarella, Rambus in the technology space. And again, I don't want to get too heavy with technology because, as I just shared with you, it's not the greatest time of the year, nor is the transport sector. So what we want to do is start focusing on consumer discretionary. Oh yeah, by the way, Steve Wynn, high close doji for the month. And yes, that is in consumer discretionary. If you got extra cash, even though Vegas isn't quite quote unquote open yet, I mean, they have a lot of restrictions. The bars have to close early, blah, 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 blah. But looking forward, and that's what this market's doing. China, online gaming, the exposure they have there. A bunch of people bored out of their minds betting on sports right now, sitting at home, locked up in COVID. So a lot of Win and MGM properties have exposure to online betting. So with that stated, MGM has a property in Michigan, and again, they do some online betting, and Michigan made it legal for online betting. We'll look at that in a minute. With Win, I'm thinking we've got an easy first test here, and I'm sorry for, again, this is information, a gold color candle formed on the close Monday. All right, so I said I would give you the video, but we're busy trading. We've got our fund that we're actively managing, our live trading room. And on the free videos, I think there's plenty of time that you could kind of get an idea of what the sense of the market condition is. There's money pouring into this space, and there's a lot of room left. So you could see some follow-through strength. By the way, you had a nice day today out of Win. Starbucks had another one in the food restaurant business. To me, I look at this buy signal, and I go, I'm not convinced. It's up against resistance, and it has a double top. It makes it hard for me to try to buy stuff like that, and so I tend to take a pass on it. But anyway, I think we'll go up and down the list. That's in the restaurant sector as well. So let's start from the top. Again, when you run a scan in the NYSE, you're going to get everything under the sun, ETFs, we're going to get everything. We're going to get preferred stocks, et cetera, et cetera. So do keep an eye on that, all right? So let's go through, and I'll go slow and I'll go slow. You can always pause the video and go and take a look at some of these names if there's some that you're familiar with. Well, there's Biotech. What an interesting concept. In a seasonality, we have drug companies. Forget Moderna, forget the fact of the COVID vaccine, but you get drug companies, usually speaking, bottom out and go higher starting in mid-month. Now, this trend is starting a little bit early because here we have Biotech had generated a nice breakout. So the question begs, should and will it continue? As long as the market maintains its uptrend, higher highs, higher lows, pivot supports this level line in the sand, my suspicion is we're going to see 151 out of IBB. Probably, I mean, that's not a hard call. We should see at least a retest of the highs, if not even higher. All right. So we have IBB. We go on down the line. Basic materials, you got Zeus, a lot of different metals. Notice that we don't have metals and mining in here yet, right? Energy, a lot of names already were in monthly buy signals. This is clean energy fuels, the fuel cell. I mean, the whole, alternative energy thing kind of blew up last month with the election, so to speak. Anyway, we have a lot of small cap banks in here. So there's a lot of stocks to consider. And as I go down the list, look, a heavy concentration in financials. And oh yeah, by the way, bring in that chart again. Hey John, are financials in there? Do we have broker dealers? Definitely we have exposure there. Oh yeah, regional banks do well. Interesting, because isn't that what we just saw? Huntington and Zion, isn't that what they are? The regional banks, right? So we're starting to see regional banks, the biotech, aerospace, a lot of the seasonality that we see come to fruition, and insurance companies as well. Guess what? It's all populating on monthly buy signals. It's coming to life. We're seeing some money flow. So follow that. We'll keep you abreast as the weeks progress. Healthcare, we already showed you about healthcare, how it can go up. Huge concentration in healthcare, by the way. And just, again, pause it. If I'm going too fast, I'm just going through this list so that you can pause and watch and look at the signals, or the symbols, excuse me. And I've covered some of the basic ones that I feel have some really strong potentials. With that said, thank you for listening. I hope you found this interesting at the very least, and also gives you a little bit more of what we do here. Lastly, let me show you our razor focus model did go long SPY. It went long, volatility stopped it out. Performance on this particular model that we use, this was a class that we did. We did this almost a year ago, January 10th. We unleashed this workspace and this model to those who attended a workshop for my Algo 17 program. And so as what we wanted to do was provide them a workable model. And we broke it down from a daily long only and a bullishly long only model. And if times came about, because in January we didn't know that there was going to be a big old sell-off, right? A short only. So this only takes sell signals. And this is long and short. This is the preferred model. Just to let you know, these are all trended very well. Profitability this year was pretty decent off the chart in this wild and crazy market. You saw the long and the short only. So it's actually a very proven strategy. It's not something I got curve fitted. It's not something that's just recently been back tested. It's been holding up extremely well in this environment. So with that said, the unbelievable thing, the neat thing is even the daily is still long and has not been maxed out. It still has maxed out, meaning how what's the average time in a trade. This thing has had some pretty decent trend runs, and when the stock market goes into a trend run, the one that lasted from July all the way into August, right? And the irony, if you look at this, it exited on a compression stop here, and it entered back a little bit better, or about the same price. So it missed that downside volatility. It got in again, got stopped out. So the entry, the exit, the entry, the exit is almost synonymous with its exit from back here in January. If you notice that line in the sand that I'm showing it ain't far off. What does that stand? It says that This market, it's had so many tests and an area that has attracted buyers and sellers. That's the irony here. And that I think you should walk away with, knowing that if this market fails, I mean, when I say fail, I mean if it has a big old sell signal, if it breaks below that line in the sand again and stays there, it's not until it breaks back above that would you be wanting to get long again, right? Does that make sense? Thanks for listening. Just some other casual ways of looking at the market and the market condition. Hope you enjoyed this video. Sorry it was long, but what the heck, we covered a lot of material. A trading strategy with the HCD, scans for the month, how we can use Thinkorswim to our advantage, and combine daily and monthly signals in different platforms. Take care, everyone, and I hope you enjoyed this video. And if you did, then give me a thumbs up. If you don't like it because of my voice or the graphics, that's a different story. We apologize for that. After all, it is free. We're just trying to share with you the tools that are out there and how we look to pick off trades. Thanks again, everyone.